In the last 52 years, silver has only done this 2 times. 1974, 1979, and now January 2026. What I am about to show you has only happened twice in modern financial history. And understanding what happened after those 2 times could be the difference between life-changing profits and devastating losses. Because both times this happened before, silver did something dramatic in the following months. One time it created generational wealth, the other time it trapped investors for 5 years. Same setup, completely different outcomes. And right now, in January 2026, we are watching the third occurrence unfold in real time. Most people have no idea this is happening. Most analysts are not talking about it. Most investors are completely blind to what this pattern means. But by the end of this video, you will understand exactly what silver is doing. You will know what happened the previous 2 times. And you will be able to make an informed decision about what comes next. Because here's the truth. The next 60 days could define the silver market for the next decade. So pay attention. This might be the most important silver analysis you watch this year. Welcome to the hidden economy. If you are new here, I break down complex market patterns in a way that actually makes sense. No hype, no hopium, just data, history, and analysis you can actually use. Subscribe right now and hit the notification bell because the follow-up to this video is going to be critical. And if you find value in this analysis, smash that like button. It helps more than you know. Now let me show you what is happening. Silver just did something extraordinary. In January 2026, silver gained 65% in a single month. Now 65% in a month sounds incredible, and it is. But here's what makes this truly historic. In the last 52 years, silver has only achieved a 65% monthly gain 2 times, December 1979 and February 1974. That is it, 2 times in over 5 decades. And now we have the third. Silver has gained 270% in 1 year alone. This is not normal. This is not regular market behavior. This is what we call a parabolic move. Let me explain what a parabolic move actually means, because understanding this is critical for what comes next. A parabolic move is when price goes vertical. Instead of normal up and down price action, the chart starts looking like a rocket ship launching. No meaningful pullbacks, no consolidation. Just relentless buying pushing price higher and higher. The chart literally curves upward like a parabola, hence the name. Now here is what you need to understand about parabolic moves. They are exciting. They create massive wealth for people who got in early. They make headlines. They create FOMO. Everyone starts talking about them. But they are also dangerous, extremely dangerous, because parabolic moves do not last forever. They cannot. At some point, the music stops. And when it stops violently. This is why understanding what happened the previous 2 times is so critical. Because history tells us exactly what can happen next. Let me take you back to December 1979. This is one of the most fascinating periods in precious metals history, and understanding it completely is crucial for what we are experiencing today. The setup was remarkably similar to what we are seeing now. Silver had been rallying hard for months. The Hunt brothers, 2 Texas billionaires, were accumulating massive positions. They believed silver was dramatically undervalued. They were buying everything they could get their hands on. Inflation was raging across America, double-digit inflation. People were watching their purchasing power evaporate. The dollar was under siege. Faith in the financial system was collapsing. In December 1979, silver gained exactly 65% in a single month. Sound familiar? It should, because that is exactly what just happened in January 2026. The chart went parabolic, completely vertical. Every day was a new high. The mainstream media started covering silver obsessively. Magazine covers featured silver. News anchors talked about silver. Your neighbor started talking about silver. Everyone was bullish. Everyone thought it was going higher. There was this sense that the old rules did not apply anymore. Silver was going to $100, $200. The sky was the limit. Now I know what some of you are thinking. That was the Hunt brothers. That situation was different. They were manipulating the market. Today is different. Yes, I understand that argument. The circumstances were different. The players were different. The scale was different. But here's what you need to understand. Markets move on historical data. They always have. They always will. Patterns repeat because human psychology does not change. Greed feels the same in 1979 as it does in 2026. Fear feels the same. FOMO feels the same. The specifics change. The pattern remains. So what happened after December 1979? January 1980 happened. And this is where it gets really interesting. After gaining 65% in December, silver did not stop. It kept pumping. January 1980 saw another 35 to 40% gain on top of that December rally. Silver peaked at around $50 per ounce on January 21st, 1980. That day marked the exact top. Think about that for a second. 65% in December. Then another 35 to 40% in January. Back-to-back months of insane gains, and then it crashed. Not a normal pullback, a complete collapse. In the following weeks and months, silver dropped dramatically. It was one of the most violent corrections in commodity history. The speed of the decline was breathtaking. The people who bought the top, they did not just lose money, many of them were completely wiped out. Leveraged traders got margin calls they could not meet. Fortunes built over years evaporated in days. The crash was so severe that the government had to step in. They changed the rules on commodities trading. The Hunt brothers eventually went bankrupt. It became one of the most studied market events in history. And here is the truly remarkable part that most people do not fully appreciate. That $50 high from January 1980 stood as the all-time record for 45 years. 45 years, almost half a century. Now, some people will say that $50 should have been broken much earlier, and technically they are right. Silver came very close in 2011. It reached about $49. But here is why it did not break through. $50 was not just a price level, it was a structural zone, a psychological barrier that had been burned into the collective memory of the market. Everyone remembered 1980. Everyone remembered the crash. Everyone remembered the pain. That structural resistance was so strong that it took another 14 years after 2011 for silver to finally break through. 14 years of that level holding as resistance. It was only broken recently in this current rally. We are now trading above that historic level for the first time in 45 years. So that is outcome number one. The 1979 scenario, 65% monthly gain in December, followed by another 35 to 40% gain in January. Euphoria at the top, everyone bullish. Then a devastating crash that marked the top for 45 years. Now let me apply this to today. If January 2026 mirrors December 1979, we just had our 65% month. And if February 2026 mirrors January 1980, we could see another 35 to 40% gain this month. Let us do the math together. Silver is currently around $110 after the recent volatility. If we get a 35 to 40% pump from here, that puts silver at roughly $150 to $160. $150 to $160. That is not a random number I'm pulling out of thin air. That is what happens if this historical pattern repeats. At those levels, the monthly RSI would be extremely overbought. Momentum indicators would be screaming. Sentiment would be at maximum euphoria. Everyone would be calling for $200 silver, $300 silver. And historically, that is exactly when tops form. When everyone is bullish, when nobody can imagine prices going down, when buying seems like the easiest decision in the world. If we reach 150 to 160, I believe that is the zone to watch very carefully. That could be the top of this move. Not necessarily the top of the entire bull market, but the top of this particular parabolic phase. A top that could take years to recover from, just like 1980. Now let me show you the second scenario, because this one is equally important to understand, and it gives us a completely different outcome. February 1974. The macro backdrop was similar in some ways. Silver was in a strong bull market. Inflation concerns were rising. The dollar was under pressure after Nixon ended the gold standard in 1971. In February 1974, silver gained 65% in a single month. The exact same percentage we saw in December 1979, the exact same percentage we just saw in January 2026. Everyone expected continuation. Everyone thought silver was going to the moon. The setup looked nearly identical to what would later happen in 1979. But what happened next was completely different. There was no 35 to 40% follow-through month. There was no blow-off top. There was no spectacular crash. Instead, something more frustrating happened. Something that tests investors in a different way. Silver entered a long consolidation period. For the next 5 years, silver essentially went sideways. It traded in a range, up a little, down a little, but never making meaningful new highs. Never giving the continuation everyone expected. 5 years of nothing. Think about that. 5 years. 5 years of frustration. 5 years of sideways chop. 5 years of watching other assets go up while your silver position just sat there doing nothing. Many people gave up during this period. They sold their positions out of boredom, out of frustration, out of needing the money for other things, out of losing faith that silver would ever move again. The financial media stopped covering silver. The excitement faded. People moved on to other things. Silver became boring. And then in the late 1970s, silver finally broke out of that consolidation. And when it broke out, it went absolutely vertical. That breakout eventually led to the 1979 to 1980 blow-off top we just discussed. So the people who held through 5 years of nothing were eventually rewarded massively. But it required patience that most humans simply do not have. It required conviction when there was no positive reinforcement. It required holding when everyone else had given up. Same setup, same 65% monthly gain, completely different outcome. One led to an immediate blow off top and devastating crash. One led to 5 years of consolidation followed by an eventual move higher. This is what makes the current moment so fascinating and so critical. We have seen this exact setup 2 times before, and each time the outcome was dramatically different. Think about what that means for you as an investor. You're sitting at a crossroads that has only appeared twice in the last half century. The decisions you make in the next few weeks could define your financial outcome for years to come. Most people do not even realize they are at this crossroads. They are just watching the price go up and down, getting emotional, making reactive decisions. They have no idea about the historical significance of what is happening. But now you know. You have the context. You understand the 2 possibilities. So which one are we going to get? 1979 or 1974? This is the million-dollar question. Literally. Your answer to this question and how you position yourself could be worth millions. Let me share my thinking on this. I believe we are more likely to see the 1979 outcome than the 1974 outcome. Here is why. The velocity of this move is more similar to 1979. The level of retail participation is more similar to 1979. The macro backdrop with inflation concerns and dollar weakness is more similar to 1979. But I could be wrong. Markets have a way of humbling everyone who thinks they have figured them out. What I am confident about is this. If we break above 121 and establish new highs, the probability of a significant top being formed in the 150 to 160 zone increases dramatically. That is the zone I am watching. If we get to 140 to 160, I believe it is an excellent opportunity to take some profits. Not sell everything, but reduce risk, lock in some gains, protect yourself from the potential crash that follows blow-off tops. Because here is the thing most people miss about blow-off tops. They feel amazing at the time. Price is going up. You are making money every day. It feels like it will never end. Selling seems stupid. Why would you sell when price is going up? But that is exactly the trap. The euphoria blinds you to the risk. And when the crash comes, it comes so fast that you do not have time to react. By the time you realize what is happening, you have already lost a huge chunk of your gains. The people who bought at $50 in 1980 thought they were geniuses. They thought silver was going to 100, 200. They had no idea they were buying the top of a 45-year cycle. Do not be that person. Now let me talk about the other side, the downside. What happens if I am wrong or if the market corrects sharply? In the 1974 scenario, the floor was established at much lower levels. If we enter a multi-year consolidation, we need to think about where the bottom might be. Based on the current market structure and historical patterns, I believe the floor for silver in a worst-case scenario is around $60, $70. That would be the ultimate buying zone, the level where smart money accumulates for the next major move. I want to be very clear about something here. Forget about $30 or $40 silver. Those prices are gone. They are not coming back. The floor has been permanently raised. Even in the most bearish scenario, even if everything goes wrong, I do not see silver going below $70. That is the new structural support. This is actually important information for anyone thinking about accumulating silver. You now know the approximate range. Upside potential to 140 to 160, downside risk to around 70 in the worst case. That risk-reward ratio is something you can work with. It gives you parameters for making decisions. Now let me talk about the psychology of what we are experiencing, because understanding this might be more important than any price level. Right now, the market is volatile. We have seen multiple days with 10 to 15% swings. Monday saw a massive crash, then a recovery, then another crash. This volatility is not a bug. It is a feature of parabolic moves. When price pumps this hard, this fast, you get violent corrections. Big institutions are selling into strength. Retail traders are buying the top. Leveraged positions are getting liquidated. Stop losses are getting triggered. This creates cascading effects. Liquidations triggering more liquidations, panic selling triggering more panic selling. And here is what happens to most retail investors during these periods. They buy when price is going up because they do not want to miss out, then price crashes. They panic and sell at the bottom, then price recovers and makes new highs. They buy again near the top, then it crashes again. Buy high, sell low, buy high, sell low. Repeat until broke. This is how wealth gets transferred from emotional investors to patient ones, every single day, without fail. Your fear pumps the markets. Your greed crashes them. I want you to really understand that statement. Read it again, internalize it. When you're scared, you sell. Your selling creates a buying opportunities for smart money. When you're greedy, you buy at the top. Your buying gives smart money the exit liquidity they need. You are the product. Your emotions are being harvested for profit. The only way to break this cycle is to have a plan before the volatility happens. Know what you will do in different scenarios. Know your buy levels, know your sell levels, know how much volatility you can stomach without making emotional decisions. If you do not have a plan, you will become exit liquidity for someone who does. Let me give you some practical guidance based on everything we have discussed. If you are holding physical silver, think long term. Physical silver is not a trade. It is wealth preservation over decades. The daily volatility does not matter to you. Whether we get the 1979 outcome or the 1974 outcome, physical silver holders will be fine in the long run. It just might take patience. If you are trading silver, this is the most dangerous time. Volatility will liquidate accounts, leveraged positions will get wiped. If you cannot stomach 30 to 40% drawdowns without panicking or getting margin called, you should not be trading this market right now. If you are looking to take profits, the 140 to 160 zone is where I would start scaling out. Take some money off the table, protect your gains. You can always buy back lower if we get a significant correction. If you are looking to buy, be patient. If we get the 1979 outcome, there will be a crash after the top. If we get the 1974 outcome, there will be some consolidation with better buying opportunities. Either way, chasing here is risky. And if you have no position and are wondering what to do, start small. Do not go all in at these levels. Accumulate gradually. Dollar cost average over time. Do not let FOMO drive your decisions. Now, there are 3 types of people watching this video right now. The first type will do nothing with this information. They will think it is interesting, close the video, and go back to checking prices every 5 minutes. They will get emotional at the worst times. They will buy high and sell low. They will eventually give up on silver entirely and miss the long-term gains. The second type will get overwhelmed. Too much information, too many scenarios. 1974 or 1979. What if neither happens? They will freeze, unable to make any decision, paralyzed by analysis, watching from the sidelines as the market moves without them. The third type will use this information to build a plan. They will understand the 2 possible outcomes. They will have levels they are watching. They will know what they will do if we pump to 160. They will know what they will do if we crash to 70. They will not be surprised by anything because they have already thought through the scenarios. Which type are you? Let me summarize what we covered today. Silver gaining 65% in a single month has only happened 2 times in the last 52 years. February 1974 and December 1979. We just witnessed the 3rd occurrence in January 2026. After December 1979, silver pumped another 35 to 40% in January, then crashed and made a top that lasted 45 years. After February 1974, silver consolidated for 5 years before eventually going higher. If we repeat the 1979 pattern and get a 35 to 40% pump in February, silver could reach $140 to $160. That would be the zone to watch for potential topping action. $70 is the floor in a worst-case scenario. $30 to $40 silver is not coming back. Now, let me be very clear about something important here. Predicting tops in rising markets is one of the most challenging things in trading. I want you to understand this deeply. No one knows the top. No one. Not me. Not the best analysts in the world. Not the biggest hedge funds. Nobody can tell you with certainty where the exact top will be. Markets decide what they want to do. They do not care about our predictions. They do not care about our analysis. They move where they move. I'm not here to tell you this is the top. Buy here, sell here. That is not my role. I'm not the one to tell you where the top is. That is for the market to decide. What I am here to do is educate you, help you understand the situation, give you the historical context, show you what has happened before in similar setups. With that understanding, you can take proper action. You can prepare for different scenarios. You can prepare for the future. You can make informed decisions instead of emotional ones. This is why I make these videos. You see, the big players in this market, the institutions, the hedge funds, the smart money, they make their profits by trapping retail investors. They buy when retail is scared. They sell when retail is greedy. They use retail emotions as exit liquidity. This has been happening for decades. It will continue to happen. But here is the thing. Retail investors can also become smart. They can learn. They can understand the game. They can stop being the exit liquidity and start being on the right side of the trade. That is my motive for creating content on this channel, not to tell you what to buy or sell, but to educate you so you can make better decisions yourself, and I will continue to do so. And most importantly, your fear pumps markets. Your greed crashes them. Do not be the person who transfers wealth to patient investors by being emotional. Now I want you to do something. Drop a comment right now. Tell me which outcome you think we get. 1974 or 1979? I read every single comment, and I genuinely want to know what you think. Also, let me know if you want me to do a similar deep dive analysis on gold. I have a lot of historical data on gold that I think would be extremely valuable for you. Drop gold analysis in the comments if you want that video next. And if you're not subscribed yet, you're missing out. This is the kind of analysis you will not find anywhere else. Subscribe, hit the bell, and I will see you in the next video. You may join the channel if you like and support my work. Remember what I said at the beginning. In the last 52 years, silver has only done this 2 times, 1974, 1979, and now January 2026. We are living through the 3rd occurrence right now. What happens next could define the silver market for the next decade. Stay informed, stay rational, and do not let emotions make your decisions. This is the hidden economy, because the real story is never on the surface. I will see you in the next one.